Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 6th of August 2019, so welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest, and we can continue. Okay, so just a quick mentioning of our JFD YouTube channel here to which you can always subscribe to in order not to miss any of our upcoming videos. Yep, I believe you can find them useful. Also, something that you might be able to find useful is of course our JFD bank website, but specifically our JFD research page, where we throw out all our analysis on a daily basis. We provide a morning analysis just for the to describe the events that happened yesterday and what to expect for today, and of course some other separate technical analysis that we do here. So feel free to check us out here, and like I said, I believe you can find something useful here. But for now, let's jump into the charts. Now, the first one I'll touch on here is the DAX, the German index here. As you know, the indices yesterday sold off, especially the US ones. But at the US indices, I will look at later in my traders tea time today. So feel free to join in then. But looking at DAX here right now, you can see that yesterday it did close around the 11,658 zone. So it was basically around here still. It was still above the lowest point of June, but as you know, the cash index kind of continued to sell off together with the US indices. So we saw the German DAX falling all the way, let me just double check that, all the way to around the 11,325 zone. So basically that's around here in between these two levels. So it managed to reach the lows of March here. So of course right now, then after kind of reaching that level, the index quickly started reversing back to the upside, and we can see that now the cash index is back around here, around this 11,680 zone, just slightly below this 11,700. So for now, I mean, we will see a nice here gap to the downside, but then a candle probably that will show the full gap being filled. So basically for now, what we could do here is, yes, we could see maybe a bit more correction to the upside, but the only thing is that be very careful with still with that upside, because we are still trading in a risk-off environment. So any kind of pullback, any pullback higher here could be seen as a nice correction before another leg of selling. So especially if we see this index continuing to trade below this downside resistance line taken from the high of the 25th of July, then yep, like I said, any pullback will be seen as a correction before another leg of selling. So in a way, if I'll draw an arrow here very quickly, we could see something like this basically happening, where, like I said, we could aim a little bit higher here, maybe towards this 11,836 zone, something like that, which was the low of Friday. And if it holds, then we could see, like I said, another leg of selling, which could in a way drive this one back down towards the June lows here. Or if this fails to withhold, then yep, further declines are possible, maybe back towards the levels that we saw yesterday and on the cash index. FTSE100, similar story, sharp sell-off yesterday, even during its own trading hours. I'm not mentioning already the fall that we saw after hours, and of course that index managed to reach an area near the 7,050. So basically, not only did it drop below this key area of support near the 7,080 zone, it dropped a little bit lower here and tested, actually almost tested this little low right here. Let me just quickly mark that. That's near the 70,041, and that's the low of the 28th of February this year. So in a way, like I said, we did saw that move to the downside, almost managed to reach that low of February, the low of the 28th of February, but the cash index right now is back above this 7,200 and 7,200 level. It's back above that one, so in a way we could see a little bit more correction here to the upside, but that said, as long as it remains below this downside line, any pullback here will be seen as a temporary correction, or a good opportunity for the bears to step in again and drive this one lower. If this, of course, this downside line breaks, then and let's say the price moves well, at least back above the 7,470 level here, then yep, we will consider a push back up here. But for now, to be honest, like I said, it is looking quite bearish, even though it is correcting right now. The cash index is correcting right now, but like I said, be very careful with this one. Gold. I talked about gold yesterday, and basically we saw this nice good in the morning. Of course, I was talking about this level here, the 1453. We had I was saying that if we get a nice push above it, then it could, the commodity could travel further up here, and it did. It had a nice push higher. Of course, the negativity in the equity markets kind of helped gold as well a little bit here, and the precious metal managed to reach the area near the 1475 zone, just maybe a few points lower, a few tenths lower there, but nevertheless it was a nice hit here, from which gold kind of started retracing back down. Now in a way, if let's say this pivot point continues to hold here, and this today's pivot point is around the 1456 and a half, something like that. If it continues to hold, we could see this one pushing back to the upside here, targeting the 1475 level, but still our main target remains the 1488. So this is the level that we're watching. That's of course in the scenario here if the pivot point holds. If it doesn't, the last step, the last resort for the bulls to step in here could be around this 1453 zone. So, but if it fails, now this is where this could travel. This is going to be our little neutral territory, because for us to examine the downside, ideally we would like to see, or the downside in the short run, ideally we would like to see a drop below the 1433 zone. So that's why we're going to be very careful here. Like I said, this area is going to be somewhat of a neutral one for us. Because in a way there could be even a possibility that it could travel towards this area here near the 1445 and then rebound and push back to the upside. So that's why, guys, for now, like I said, we're going to consider this scenario as our main one. If the pivot or the 1453 level continue to hold, then yeah, we could see another push higher. AUDJPY, that's quite an interesting one as well. I mean, I've covered this one recently, and basically what I was saying that here is we were watching, we were watching this level right here, the low of January 2nd this year, and ideally what I was saying that if we see a drop below the 71.38 zone, then in a way it increases the chances for a further move lower. And you can see that we did have a drop, but it was kind of a false drop, to be honest, and it quickly reversed back to the upside. You can see that now the pair is trading near the 72 zone, so should I say above the 72 zone, but you can see that it traveled higher. It tested its 21 EMA here, failed to push above it, and now it declined, and now it retraced back down. So it's now currently balancing just slightly above the 72.20 zone. We'll keep a close eye on it, because if it breaks, then we could see this one maybe sliding back down, because still as I've mentioned recently, still this level here for us remains the more important one. near the 72.63. We need to see a nice good clear break, and maybe ideally we would like to see maybe a close at least of a 4-hour candle above this level, and this way we could consider a further push higher, a further correction higher. I need to reiterate that, because we're still trading below this downside resistance line taken from the high of the 23rd of July, and in a way, as long as it kind of remains intact, any move higher towards it could be seen as a correction to the upside, a small correction, and like I said, as long as this remains intact, then we will aim for lower levels. So for now, from the very short-term perspective, this is what you could be looking at. If we see a push above the 72.63, we will aim for the 73.16, 17 zone, but if that fails to withhold, then yep, we'll target this downside resistance line. In terms of the downside here, again, like I'll repeat myself, a drop below the 72.20 could in a way lead this one a little bit lower, but to be honest, I mean, it could be a little bit of a difficult one here, because to be honest, it could start ranging here and moving sideways. So that's why ideally probably we'll wait just for a drop below these recent lows here, near the 71.30, approximately around there. If we see a drop below this would confirm a forthcoming lower low, and we could target that level here that I was talking about, the 70.46, and that's basically the low of January this year. So for now, like I said, this is our downside scenario. We're going to take a very cautious approach and just carefully monitor this level here. If we see a drop below this, yep, good potential move here for the bears. GBPUSD. GBPUSD, I talked about this one as well yesterday, and still it remains inside this little kind of range here between the 1.2080 and the 1.2172-75 zones. So we're basically waiting. We're waiting until it gets out of this one. If we see a drop through the lower side of this 1.20, through the lower side of this little range, then a drop below the 1.2080 could open the path towards the long-awaited psychological 120 zone. So, but if this pushes above the 1.2171, 72, 75 level, something like that, initially aim for the 1.2250. Be careful around here. As you can see, it previously acted as a good area of support, resistance. But if this fails to withhold, then yep, a further push higher, a further push for a bit more correction here to the upside could be on the table. So we could see this one moving towards this downside resistance line. So for now, like I said, a good push, a good strong push above the 1.2175 zone could lead towards the 1.2250, but if this fails, then this is where, like I said, more bulls could start joining in a little bit here, at least for a while, and pushing this one further up. EURUSD, good run yesterday. This is what I was talking about yesterday. So yesterday in the morning, we were still trading around here near the 1.1120. It pushed higher. It traveled all the way here, and this is what I was saying basically. Initially I had a curve here, because I was saying that if we see a hold up near this downside resistance line, then yes, we could see this one traveling back down again. But if we see a break of this downside line and a push above the 1.1190 level, then well, this increases the chances for the pair to push further up here towards maybe towards the 1.1275 or 80 zone, something like that here. So for now, this is going to be our game plan. For now, we are somewhat more bullish than bearish on this one, but again, just be very careful. Let's say suddenly this reverses back down and drops back below this downside line, then of course the upside is off the table. But as long as it remains above the 1.1190, we will continue kind of aiming slightly towards higher levels. Like I said, for now, be very careful with this one. What you could do here is basically monitor some of these key potential breakout points. So in a way, if we see a push above another push above the 1.12 25 zone, something like that, then yep, we could aim for a little bit higher. Initially, like I said, we will target the 1.1280 and then we'll take it from there, see what it wants to do. Maybe we'll decide to retrace back down again here, so that's why we're not gonna push this one drastically to the upside. And this leads us into EURGBP. So we had a fantastic run yesterday as well, so this is what I talked about in my yesterday's videos. Basically, it managed to reach our area here near the 0.9222-23 zone, but to be honest, it managed to move all the way towards this area right here near the 0.9250. It managed to get a perfect test of that level, and from there it reversed back to the downside, now currently trading slightly below the 0.9223 zone. So for now, from the very short-term perspective, what you could look at here is, in a way, if we see another climb higher and if we see a push above the 0.9250 level, which is the yesterday's high, if we see a push above that, the next target for us is of course the 0.9270. I talked about this level previously, but in a way, we could even see there could be a possibility to see a test of the 0.93 level. And just to show you what that level was here in the past, we need to scroll back a little bit here in history, and that's basically the highest point of August 2017. So the 0.9306 area, that's the highest point of August, so keep your eyes on that one. But again, like I said, we will consider higher levels only if we see a push above the yesterday's high near the 0.9250, and then, like I said, we'll initially aim for the 0.9270, also one of the highs here, one of the August highs of 2017. But if that fails, then yep, it could be opening the path towards this nice good level of 0.9306. In terms of the downside here from the short-term perspective, what you could keep an eye on here is of course this 0.9190 level. If this breaks below this, then of course there could be a chance to see a bit of a move lower here. The only thing is that probably what you could do here is keep an eye on this tentative upside support line taken from the lows of the 25th of July, and then yep, also if we see a drop below this level, this could also break this upside support line, and then yep, we could target slightly lower areas like the 0.9124, or even going a little bit lower here towards the 0.9088 zone. So keep your eyes on that one. So basically that's the game plan. I'll repeat myself again. For the upside, there's 0.9250, that's what we're looking for. And for the downside, a drop below the not only this upside support line, but also a drop below the 0.9190 level. That's what we need in order to consider for slightly lower areas here. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me later on at my trader's tea time, as always, that's 13:15 GMT. We'll have a look at some of these instruments, we'll see how they've performed, but for now I hope you have a wonderful trading day, and I'll see you later. Bye bye.